President Biden is acting today to protect American firms and workers from unfair trade practices by China. This follows an examination of current tariffs. The choice was made in response to ongoing unfair trade practices, including as coerced tech transfers, intellectual property theft, and an overall economic structure that significantly hinders competition in the U.S. economy and foreign markets. No differential support, no tariffs. I therefore support the removal of tariffs in general. Actually, I support eliminating tax advantages for electric vehicles, EVs, but only if the tax incentives for gas and oil are also removed. Therefore, I support no taxes or incentives for oil and gas or electric automobiles. With Tesla launching previously unheard of incentives and waging a fierce campaign against fierce competition, China is a crucial battleground in the global electric vehicle industry. We'll look at how these actions might affect Tesla's stock price and market share. We will also examine the most recent tactics and trends influencing Tesla's future and how they will affect the stock market. Watch as we dissect the data, examine the facts, and offer insights that may affect your financial choices. You won't want to miss this update, regardless of your level of experience investing in electric vehicles or your level of curiosity about them. So please hit the like button, subscribe if you haven't already, and let's begin figuring out what might be a revolutionary approach for Tesla in one of the most profitable sectors on the planet. This is the news about Tesla stocks. Now, let's begin this video. The relationship between the US and China has been especially strained in the midst of growing trade tensions that have clouded international markets. A major escalation that reflects the larger strategic tensions between the two economic giants is the recent U.S. imposition of a hefty 100% tax on Chinese-made electric automobiles. China has indicated that it is prepared to put a 25% tariff on imported cars with huge engines as a form of retaliation. This action might further destabilize the automotive industry and have an impact on a number of significant companies. In spite of these obstacles, Tesla has been able to not only continue operating in China, but also flourish there. Record-breaking delivery numbers from Tesla's Beijing center amply illustrate the company's tenacity. Despite trade restrictions and economic uncertainties, this spike in deliveries may be a sign of strong demand for Tesla's cutting-edge electric cars. A crucial issue is brought up by this outstanding performance. Is this the start of a major comeback for Tesla in China? As the business navigates political turbulence and capitalizes on its competitive advantage, Tesla's continued success in China may portend a wider trend of expansion and recovery. Maintaining and growing its presence in China will be essential to determining Tesla's future course as it pushes the limits of electric vehicle technology and market penetration. Elon Musk, the spokesperson for Tesla, recently said in an interview that he was shocked by the increased tariffs that the Biden administration had imposed. In keeping with his opposition to comparable tax breaks for the oil and gas sector, Musk pushed for the removal of all incentives for electric cars. "I'm generally in favor of no tariffs," Musk said, and also actually in favor of no tax incentives for EVs, but only if the tax incentives for oil and gas are also eliminated. Tesla just claimed the most deliveries in a single day at its Beijing delivery center at Crab Island. According to local reports, a social media video showed a number of consumers at the center prepared to pick up their new Tesla cars. With 13,800 new registrations between May 13 and May 19, a 41% increase from the previous week, Tesla also experienced a rise in new registrations in China. Recent actions by Tesla in the Chinese market are very noticeable and demonstrate the company's calculated strategy to gain a bigger portion of this expanding market. Tesla has launched a number of attractive incentives for customers who place orders before June 20th in an attempt to attract more clients. Given the expanding network of Tesla charging stations throughout China, the company's offer of free supercharging is a significant benefit. Additionally, for orders placed by June 30th, Tesla is offering zero interest rates and $0 down payments on its well-liked Model 3 and Model Y automobiles, which reduces the hurdles for potential purchasers. In a fiercely competitive market where BYD, a dominant force in China's electric vehicle industry, controls the majority of the market, These incentives are more than just generous offers. In just the first 4 months, BYD sold 434,447 electric cars, which is a far cry from Tesla's 163,944 units sold in the same period. However, it's critical to dissect these statistics layers. BYD sells a lot of hybrid automobiles, which appeal to a distinct market of customers who might not be prepared to switch entirely to electric vehicles. In contrast, Tesla performs noticeably better over the same time period when the comparison is limited to only electric cars. This illustrates Tesla's dominant position in the all-EV market, underscoring the potency of its advertising campaigns and the allure of its product line. In addition to challenging BYD's hegemony, Tesla is solidifying its position as a leader in pure electric innovation in one of the biggest automobile markets globally by emphasizing the special advantages of electric driving and supporting this with attractive financial incentives. These aggressive marketing tactics are essential to Tesla's efforts to boost brand loyalty and market penetration in China, laying the groundwork for long-term growth in a vital region. Taking a broader view, Tesla's standing as a foreign company in China with strong sales numbers indicates that it has room to develop in the thriving Chinese market. In the meantime, Tesla is preparing to launch the Robotaxi, an autonomous car that would put it directly in rivalry with Google's Waymo in the US. This leads us to a critical analysis of laws pertaining to self-driving cars. Joining us today is Steve Wesley, Managing Director of the Wesley Group and former Tesla board member, to shed light on whether regulations will favor Tesla's Robotaxi. The conversation about autonomous vehicles is heavily centered on regulation, Steve says. While Waymo has taken a cautious approach, starting in select cities and securing regulatory approval, Elon Musk is pushing widespread self-driving capabilities, albeit with a few bumps along the way. This audacious plan seeks to quickly improve the technology using data from the real world. Known as one of the Magnificent Seven, Waymo, a division of Google, has already introduced autonomous cars in places like Phoenix and San Francisco. But because to better route planning, Tesla's full self-driving software recently outperformed Waymo's, concluding a journey 2 minutes earlier and without any disengagements. Tesla is prepared to meet the strict regulatory requirements needed for mass deployment, as changes to its FSD software are anticipated soon. Don't bet against Elon Musk, Steve continues. The improvements in Tesla's autonomous technology are encouraging, and his record speaks for itself. With new job advertisements looking for specialists in robotics, AI, and autopilot systems, Tesla is stepping up its focus on AI. This implies that Tesla is dedicated to not only setting the standard for electric cars, but also to advancing autonomous driving technologies. Given his participation with several companies, including his social media platform X, some investors are worried about Elon Musk's ability to maintain focus as Tesla continues to create headlines. Steve Wesley, a former board member of Tesla, offered his thoughts on whether Musk's wide range of interests could work against Tesla. First, though, I would like to express my gratitude to everyone who has watched this far. We immensely benefit from your likes and subscriptions, which help us create more material and expand our channel. Let's talk with Steve in more detail now. The challenge for any top CEO is maintaining a laser focus, Steve says. And currently, it seems Mr. Musk's attention is spread across too many fronts. He likened Musk to Jensen Huang, who is widely considered to be one of the top CEOs in the world and whose unwavering focus has produced exceptional outcomes. He said that more of this targeted strategy would be advantageous for Tesla. It's critical to take into account Elon Musk's business activities in their larger context. Musk is a dynamic leader who oversees multiple significant businesses at the same time, expanding his impact beyond just Tesla. Don't miss any of our upcoming updates. We appreciate your time and hope to see you in the upcoming video. If you want any extra modifications, please let me know.